Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of companies and try to make sense of what is really going on behind all the jargon. Today we are looking at Global Crossing Airlines Group Incorporated, or GlobalX's latest quarterly report. Grab your popcorn because this report has some really interesting numbers that show a company trying to take flight. So this is basically a quarterly checkup on the company's performance for the period ending the 30th of September 2025. It gives us a snapshot of how they are doing financially. Let's jump right into the numbers, starting with the bottom line. For the 3 months ended the 30th of September 2025, Global Crossing Airlines Group recorded a net loss of about $1.9 million. Now that might sound like a lot, but compare that to the same period in the previous year, 2024, when they had a loss of nearly $4.9 million. So they have cut their losses by about $3 million, which is a significant improvement. For the 9-month period, though, things are a bit different. In 2025, their net loss was around $12,000. That's a huge improvement from the $10.9 million loss they had in the same 9-month period in 2024. So over the course of the year, they are definitely reducing the red ink. Now let's look at what the company owns. As of the 30th of September 2025, their total assets were about $170.7 million. This is an increase from the 31st of December 2024 when it was about $166.7 million. It sounds like they are growing their asset base. But what about what they owe? Their total liabilities stood at a hefty $198.9 million on the 30th of September 2025. This is actually a slight increase from about $196.2 million at the end of 2024. So they are taking on more debt or other obligations as their assets grow. When we look at the company's equity, we see something called a retained deficit. This is essentially accumulated losses over time. As of the 30th of September 2025, the retained deficit was about $71.8 million. This is more than the $70.6 million deficit they had at the end of 2024. This means that even though they are reducing their quarterly losses, the overall accumulated losses are still growing. Let's talk about how they spend their money. For the 3 months ended the 30th of September 2025, their total operating expenses were about $57 million. This is an increase from about $54.9 million in the same period in 2024. A significant chunk of this increase comes from salaries, wages, and benefits, which jumped by almost $4 million. This is likely due to hiring more people to support their growing operations. One area where they are spending less is on aircraft fuel, which dropped by about $2.8 million. This makes sense as they reduce their charter flying, which is more fuel intensive. On the flip side, maintenance costs went up by about $1.7 million. This is probably because they have more aircraft in their fleet and are flying them more. Depreciation and amortization costs also shot up by almost $1.4 million. This is often a sign of increased investment in assets like planes and equipment, which we saw earlier with their growing asset base. Now for the good news in the operating income section, for the 3 months ended the 30th of September 2025, they actually reported an operating income of about $1 million. This is a massive swing from the operating loss of $2.5 million they had in the same period in 2024. This really shows them improving their core business operations. Looking at the 9-month period ended the 30th of September 2025, they reached an operating income of about $7.4 million. That's a huge jump from the $4.6 million operating loss in 2024. This is a really positive sign that their strategy is starting to pay off. Let us examine their revenue streams. For the 3 months ended the 30th of September 2025, their charter revenue saw a big drop by about $12.7 million. This is because they intentionally cut back on this type of flying, focusing more on their API business. ACMI revenue, on the other hand, surged by over $16 million. This represents a 44.4% increase. This tells us that their ACMI business, where they provide aircraft crew maintenance and insurance, is really taking off and becoming the main driver of their revenue. For the 9 months ended the 30th of September 2025, charter revenue decreased by a substantial $25.5 million. Again, this was a deliberate strategic shift, but AMI revenue more than made up for it, roaring ahead by $44.7 million. This business is clearly the engine of growth for GlobalX right now. It is interesting to see their revenue per block hour. For charter flying, it increased about 8%. For ACMI, it pretty much stayed the same. This suggests they are managing their pricing well in the ACMI segment while shifting away from less profitable charter business. Let us look at the expenses again for the 9-month period. Salaries, wages, and benefits are up by over $9 million. This is largely due to hiring more pilots and other staff to manage their expanding fleet. Their pilot headcount increased by 10 pilots. Maintenance costs have also gone up significantly by over $5.3 million. This is a big jump and likely reflects more extensive repairs and the cost of parts for their growing fleet. And depreciation and amortization expense grew by over $3.6 million. This aligns with the increase in their assets, especially with new aircraft coming online. This all led to a much improved operating income for the 9 months ending the 30th of September 2025. They achieved an operating income of $7.4 million compared to a loss of $4.6 million in the same period last year. That's a massive turnaround of over $12 million. On the non-operating side, interest expense has increased. For the 9 months ended the 30th of September 2025, it was about $8.2 million, up from $6.4 million in 2024. This increase is linked to more aircraft being financed through leases and loans. Now let's talk about cash flow. Over the 9 months ended the 30th of September 2025, their cash decreased by about $6.8 million. This is somewhat concerning as companies usually want to see their cash grow. However, they did have a lot of spending related to investing and financing activities. Looking at operational cash flow, it actually provided about $9.5 million in cash for the 9 months of 2025. This is a huge improvement from the negative $2.3 million in 2024. This means their core business activities are now generating positive cash flow, which is a critical indicator of health. It is also interesting to note the share count. As of the 5th of November 2025, they had over 65 million shares outstanding. This includes different classes of stock. This is important because it can affect earnings per S-Hair calculations. The company is heavily involved in aircraft leasing. They have several agreements for various aircraft models like the AI-Shijio, RRC, and AI-RCE. For example, a lease agreement for an AI-20 Accession aircraft entered on January 2022, SA term of about 1 year. They also have longer term agreements. They also purchased an Airbus AI aircraft for about $10 million. This purchase was financed through a loan and a promissory note. The terms of this loan include monthly payments that vary over time. When it comes to their employees, they use stock options and restricted stock units or RSS. They grant these as part of compensation. For example, they granted over 4.1 million RSs in the first 9 months of 2025. These are ways to incentivize employees. Interestingly, Global Crossing Airlines Group has an expected effective tax rate of 0%. This is often due to having a valuation allowance on their deferred tax assets because of past losses. A significant chunk of their revenue comes from just a few customers. For the 3 months ended the 30th of September 2025, 2 customers accounted for about 57% and 13% of their revenue respectively. This kind of customer concentration can be a risk. If they lose one of these major clients, it could significantly impact their business. According to the report, the company's president and chief financial officer is considered the chief operating decision maker. This means they are the key person making strategic decisions for the company. They manage the business as one single segment. Global Crossing Airlines Group aspires to be the best at what they do, focusing on on-time performance and dispatch reliability. They aim to deliver customers with top-notch service. Looking at the numbers, it seems like Global Crossing Airlines Group is at a real turning point. Their shift towards AMI services and away from charter flying is showing significant financial improvements. The reduction in net loss and the move to operating income are strong indicators that their strategy is working. However, their high level of debt and the concentration of revenue with a few large customers still pose risks. They are managing their expenses better and their asset base is growing, but they need to convert these improvements into consistent profitability and manage their debt effectively. The company is clearly focused on scaling up its Akamai business, which appears to be the future for them. We will be watching closely to see if they can continue this positive momentum and navigate the challenges of the airline industry. What's your take on these numbers? Do you think Global Crossing Airlines Group is finally ready for takeoff, or are there still some turbulence ahead? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe to Corporate Decoder for more in-depth financial analysis. And don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we will see you in the next one.